Good evening, everyone. Welcome to Accounting for Merchandising Business. In this chapter, we will consider the following questions. First is the difference between the service firm and merchandising firm. We all know that service firm is been discussed last semester or last period, not last semester. How does a firm account for inventory? There's a lot of ways how to get inventory. So we will find out after that. Next, how financial statement affected by the purchases and the sales of merchandising inventory or merchandising inventory. There are a lot. You could see the profit and the loss of the company. Will you continue or will you not? I just want to give credits to McGraw Hill or Irene for the slide for today. I would like also to thank for the source, and I'm only a student who want to give ideas to my co-students. Okay, I'm not a teacher, I'm not a perfect student. Okay, I commit mistakes, but maybe it's only minimal. This is for students who have the hard time in understanding because of their instructor who's not or does not explain things properly. Okay. If you have questions, you can just ask on the comment section and I will just answer. For this night, I believe that I can produce 5 videos and be uploaded in the same time. For the meantime, let's go on. 4 major types of businesses. First is services. Services, this is you offer, you do the work for them. Just like accountants, incomes and accountants, we do the financial statement. We see if the company is profitable or not. Attorneys, they defend each client that they have, whether they are in the correct side and the wrong side. Physician, in comes to physician, we check, right? We check the patient. We cure the patient. In comes to merchandising business, we are the one who buy and sell. So this is our topic for today, merchandising business. But we will just go on with the major types of businesses. Okay, I'm just explaining. Just like Walmart, Safeway, The Gap, and the like. Income in manufacturing business. Here are, you will buy the raw materials, you will get someone for creating your material, and you will sell it. Just like General Motors, 3M, Renault, Metal. Manufacturing business is incorporated with merchandising business. Merchandising business will never survive if there is no one who will manufacture their product. Incomes in financial, this is our banks, creditors, okay, who can give you credits, okay, if I'm not mistaken. So also loan sharks are included. Financial, for example, Citicorp, Merrill Lynch, and American Express in America. But in the Philippines, we have China Bank, PNB, the Philippine National Bank, BDO, Banco de Oro, and the known loan shark is, I think, the Alliance in PNB, I think, or that's also an example for insurance. Insurance is also part of financial. Sun Life. Loan sharks, there's a lot of loan sharks, okay, in the Philippines. Next. Major types of business, okay, we are just here in major types of business. Which type of business is a musician? If the musician performs in concert, it will be called service business. If he sells CDs during his break, you call merchandising, okay, or merchandiser. If a musician duplicates and records his own song, you can manufacture. You can call him manufacturer or his business as manufacturing business. Financial. Why financial is not in the scenario? Because he is not giving money, he is not executing money in other people. He will not give a loan. He will not do service about money. Okay? Let's go forward. I want just to give ideas about the computation of net sales. Okay? We jump on this part. Sales. Sales is sometimes called gross sales and also known as net sales is also known as net sales revenue. Okay. Incomes in computing the net sales, you need to get your sales. This is the overall sales or sales revenue itself. Okay. We minus the overall, minus the return and allowance, minus the discounts. Okay. This is often given to the customer in order them to pay quickly. This is also given to good payers or good customers in order to gain more customers, to gain more potential customer. It's better to get lost or to minus 10% than the 90% of the total equity. Okay, let's go on. Cost of goods sold. Cost of goods sold is calculated as number of units sold during the period of time, and it is multiplied by their unit cost. As we said, unit cost, this is how much is the item sold, okay? And then the number of units is how many did he sold in this unit, okay? Cost of goods sold is a major expense item for most non-service business. This is the reason why most businesses has the problem comes in the cost good of services or cost of goods sold. I mean, I've completely missed out the word. I'm sorry. Next, cost of good sold is expense. Why? It is recorded the period of time or the period in the period. Okay, as we say, the units sold is the revenue is recognized regardless of what units is paid for. The expense is matched against the revenue. That is, we know what is the cost of goods sold. Okay, because it is an expense. You don't know what will happen, right? In the near future. It is already sold, but revenue is recognized. Just repeating what I'm telling, okay? What I'm saying. Regardless of everything, okay? The measurement of cost of goods sold is an excellent example of the application of matching principle. Why? I already answered the question why. Because the expense is recorded in the units that are sold, okay? Or it is recognized as revenue, regardless of the units paid for. It's just like here, for example, if ABC company have bought 500,000 worth of merchandise in Miniso and he just paid for 100,000, this is already sold. They consider as sold, okay, because it's already got lost. It's already gone. Cost of goods sold became expense if it is a liability of the customer itself, right? Let's go forward. Cost of goods sold. What is included in the net cost of purchase? First is the beginning inventory. Add purchase net. Next is the cost of goods available for sale. Cost of goods available for sale is expresses the total cost of what has been available for sales throughout a given period. This is just like how much is the sales available for that period. It does not include the liability buy of the person. Okay, let's deduct the end inventory. That will be the formula for the cost of goods sold. Cost of goods sold formula is beginning inventory plus purchases. Purchases of your company. For example, I purchased 500 pieces of ball pens. So that is your purchase. Minus the purchase, return, and allowance. Okay? So, if you have returned 20 of the ball pen, it will be minus in the 500. Minus the purchase discount. Of course, no one will not give discounts. Okay? It is relatively, okay, it is common to have discount. Let us plus the transport in, the purchase, and net. What is this? Okay? Transportation in, or freight in, as we know. We will plus this and the purchases itself and the net income, or the net. It will equal to cost of goods available for sale. Okay, that is the total for cost of goods available. You will minus the ending inventory to get the cost of goods sold. Let's go with the first and let's recap about the cost of goods sold. Beginning inventory plus the purchases minus the purchase return and allowance and the discount plus the transportation in, purchases, and net. The other purchases, okay? And net. So that is the formula for cost of goods available for sale. Let's minus the ending inventory to get the cost of goods sold. Cost of goods sold, or the cost of goods available for sale, is the total cost of what has been sold for throughout the given period, okay? Regardless if it's credit or on account or cash. Income statement format. Single step with details or multi-step with details. Single step is condensed and multi-step that is condensed. Let's just look the examples. Incomes in the income state format. The multi-step with details is net sales minus that net sales, that is 100, minus the less of cost of goods sold, that is 60. The gross of profit margin will be 40. So that is a formula to get the gross profit of margin. Okay? Now, operating expense. Okay? Incomes in selling, you have the sales salary, that is $8, and advertising, that is $2. The total selling is $10. Administrative salary, that's $3, and the building rent, that is $8, is equal to $11. Incomes in administrative, this is the one who is the head of the business, okay? It's like the supervisor, the manager, the how you can call that, the one who is in charge in the selling part. Sales salaries and admin salaries are different. Why? Selling, these are the cashier, the sales representative. Administrative, these are the manager, supervisor, your main office, where your board of directors will be present, or you can create board of directors if you're a corporate company. Now, we get the total operation expense, which is $10 plus $11 equal to $21. Operation income is $19. Okay? That is what we get from the examples. Okay? Non-operational operating revenue or expense. Interest expense is part of operation income. Okay? Interest expense, $1. So you will minus $1. So in operating income. Okay? Okay. Let us see. How much is the sorry. How much will be the income before tax? It's $18. Okay. Now, income tax expense is $3 that is being acquired by the government. So the total net income will be $15. This is a multi-step with details. This is a good part for every financial income statement. This is most prepared, the multi-step with details, because it was being detailed where it goes, not like the multi-step condensed. You will just see the selling expense, administrative expense, and then la 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 la. You will not see what is going on. Okay. How it became $19? I would like to know why it's $19. Because you just get your calculator, you minus $40, minus 11, it's equal to 29 minus 10, that is 19. You will minus, okay? I said a while ago that it's a given, but how it became a given, I just explained how it became a given operating or operating income. So let's go on the multi-step or the content. Net sales. Net sales is still 100, less of cost of goods sold is 60. The gross profit margin will be 40. Let's go to the operating expense. The operating expense is $10 and the administrative expense is $11. So now we don't know where did the selling expense go and the administrative expense go. Now the total operation expense is $21. It will be credited, not debited. So it's on the right side. So now it is now $19. Okay. So let's minus the interest expense, it's $1, and the income tax expense, that is $3. The total net income is $15. We can see that each $100 will cost you a net income with $15. Okay, let's go on. The multi-step income format classifies the interest as non-operating items. What are the non-operating items? Okay, non-operating items, these are items that is not being used in operating your business. These are just expense that is moving on. Okay, just like interest, the tax in the government, right? Why is that so? Because you borrow money. So there's interest incomes in the money that you borrow, right? Tax, government tax, diba? Government want to seep the blood of each everyone who is being present in this statement. But the interest is still the operating activity on the cash flow statement. We can see it's still part. It's still being minus because it is inspirable. Let's go. Income statement format for single with detail and single step with condensed. Okay, we see. Net sales is $100. Okay. Less expenses, cost of goods sold, that is $60. Sales salary, that's $8. Advertising, that's $2. Admin salary, $3. Building rent, $8. Interest expense, $1, and $3 for income tax. So we can see all the expense was be on a single step. No more, no less. No more, no less. Now, as we can see, the total expense in the income of the $100 is $85. Now, the net income, because we minus 100 minus 85, is $15. All expense will go to the debit side and the credit side will be the sales itself, okay? Incomes in the condensed part is the net sales $100, less the expense $60, the selling $10, the administrative $11, interest expense $1, and income tax expense $3. We can see that it was being condensed. It was being condensed again. That is being the total of 85 and 15. When using condensed form, either multi, single step, it's enough information to separate the information and expense into selling and administrative category. This is the least their sum as operating expense. We can see it's hard. It's questionable how it was being presented, right? So the most recommended is the single step with details. Okay. Here, income statement format. Single step with details. A common modification of the single step method is to have the income tax expense separated out from the operating expense. Okay? Because it's not being part of it. Now, the meaning of these three special are covered in more advanced courses. Results of discontinued operation, extraordinary gain and losses, and cumulative effects of a change in accounting principle. No matter what is the income statement format is used in three special items, it's always just in the bottom of the income statement. Okay, we can see that sales $100, less than $60, cost of goods sold, the selling, the administrative, it's 11. The total of operation is 81. So now, 100 minus 81 is 19, minus the income tax, that is $4. And incorporation from the continuing expense, that is discontinue the operation of disposal gain, that's 2%. These are the other expenses of the company. Okay. So the extraordinary item, like tornado loss, because of the calamity, that is $3. I mean, discontinue of operation of disposal gain, that is additional. I'm sorry to be misinformed you again. Discontinue the operation of disposal, like you will earn $2 because you're stopping it. You're gaining the money. You're going for it. Cumulative effects of a change in accounting principle, that's $4. We can see that we minus 15 to 3 plus 6, that is 18. Okay, why? We can see our net income is 18. What is not being stated in this statement? Let's go forward. Inventory. Inventory is intangible property that is being held for resale or will be used in producing goods or services. Inventory is reported on the balance sheet as an asset. Why? Why is that so? Because this is part of your money. The money is being spent in your inventory. If your inventory gets lost by calamity, this is also mine is a tangible property that is being lost or completely lost. There's a lot of types of inventory. It's the merchandise inventory, raw material inventory, work in process inventory, and finished inventory. This is for the manufacturer part. But in the next video, we will discussing the next or the continuation of this series.